So in this video, I'm going to go over some strategies on how you can manage cash in your S corporation. So this is going to be geared toward a digital agency or some other professional service business where there's a single owner S-Corp owner and you're making 7+ figures in revenue and you have a lot of cash flow. So you're trying to balance out what you pay yourself in wages and what you could take out in the form of distributions. So first and foremost, I'm sure you've heard this before, you have to pay yourself a reasonable salary as required by the IRS. Why do you have to pay yourself a reasonable salary? Well, when you take money out as a distribution, you do not pay payroll taxes on that. So payroll taxes are usually around 7.5% to 8% for employer and that same amount for employee. So you're looking at around 16% that you're paying in payroll taxes on the wages that you pay yourself through payroll. So it is advantageous that you would take more out in distributions and less out in the form of wages. However, the IRS says, no, you need to pay yourself reasonable comp because they want that. They want those payroll taxes. So what is reasonable comp? Well, reasonable would be, for example, if you had to replace you, what would you pay yourself? So there is a sweet spot between keeping the IRS happy and basically minimize taxes for you. My recommendation would be figure that out with your tax accountant, set a salary for yourself, and just run that through payroll. So the second thing that I recommend doing, if you have significant cash flow beyond your salary, so you're taking out a lot in distributions, what you can do is use all of your use all of your wages and have that go towards state income taxes, federal income taxes, and your 401k. So for example, if you paid yourself out $100,000 in taxes, $100,000 in wages, you may have $25,000 of it go to your 401k, $50,000 of it go to your federal income taxes, and $25,000 go to your state. So work with your tax account on what those numbers can be, but basically your net paycheck take home would actually be zero because it's all going toward taxes and 401k. The nice thing about that is that can sometimes mean that you don't have to pay quarterly estimated taxes. So if these dollar amounts are enough to cover your taxes for the entire year, you don't have to deal with quarterlies. All that money just goes straight into the IRS and the state and your 401k. And then basically what you do is you pay yourself a monthly distribution, and that's the money to live off of. So a big question I get is, how much money should I keep in my bank account? And that's a very good question because you need to know, if something goes wrong, how much money should I have on hand to make sure I continue to do my operating expenses, I continue to pay my employees. And so as a rule of thumb for a service-based business, say, like a digital agency, and if you have recurring revenue, you don't have to have so much in the bank account because you have less risk versus if you have project revenue, the risk is the projects don't come in, you don't close, your pipeline gets cold, and so then you need to dip into the extra cash. So as a rule of thumb, I would say 8 to 10% of your gross revenue. So an example would be if your revenue is 1.2 million annually, keep 8 to 10% of that, which would be anywhere between 96,000 to 120K in the bank account at all times. So in this example, let's say you decide, hey, I have 1.2 million revenue annually in the last 12 months. I'm going to keep $100,000 in the bank. I'm not going to touch it in reserves. So let's say at the end of the month, you have $130,000 in the bank. Go ahead and take that out as a distribution. And just a note here, you do not get taxed on your distributions. You're actually taxed already on your net profit. So when you look at your profit and loss statement, your year-to-date net income, that's what you're being taxed on, plus your wages. So basically that net income gets reported on a K-1. Then you have your W-2. Those get added together and you're taxed on those. So don't worry about taking money out in the form of distributions because you think it's going to create more tax liability for you. It does not matter if you take money out or don't. Okay, distribute cash for quarterly tax vouchers. So one thing that I do is once I get my tax vouchers, so I am a CPA, first of all, but I don't do my own taxes anymore. And at Momentum, we do not prepare taxes. We just do the outsourced accounting. and back office support for our small business clients. So one thing you can do is take those vouchers, you can put them into your accounting system as bills, and they'll actually get coded to your owner's draws. And so like each quarter, you'll know from a cash flow perspective how much money you need to distribute to yourself. In addition to your normal distributions, you can distribute the exact amount to cover your tax vouchers. So you can either pay the tax vouchers directly out of your business, or you can, and that'll just get coded as a distribution, or you can distribute that money to yourself and then pay it from your personal account. Either way, it's a personal tax payment. It's not a business tax payment. So your accountant will know how to recognize that and make sure it doesn't get misclassified as like an expense or something. And then the last thing to do is to make sure you're working with a tax accountant. And so with our clients, we always have the books up to date every month. We get everything ready to go. So throughout the year, we can be proactive and work with a tax accountant. And so typically June and November are a good time. June is, after the rush of tax season. Typically around April 15th, they're done with busy season and then they go on vacation for a bit. So everything, June's a nice slow time. And then November before the December year-end planning rush. So definitely feel free to reach out if you have an S corporation and need help with cash flow management. Again, we don't do taxes. We just help with cash flow management. A tool that you might like for cash flow forecasting is called Float, and you can help that'll help you a lot with planning and looking forward. So my name's Nicole, and I am the founder of Momentum Accounting. Feel free to go to momentumaccounting.com if you have any questions.